All right. Today we had FOMC and we also are the day after we had AMD and Microsoft earnings. So price action during these events is going to give us a very good read of the market. And last night I gave you a lot of objective reasoning on why this market was still very bullish, looking at many charts in many sectors. And I essentially built the case that we are in a minor pullback due to a sector rotation, while many sectors are still pushing all-time highs. And there is just never going to be a market where sectors are pushing to all-time highs, and that is bearish. So I gave you the bull copium or the bullish hopium on how we were likely going higher, even though a lot of you were doubting the possibilities and you thought the charts were looking very bearish. And then today we had a very bullish candle on SPY going up 1.63%. And if you look at this candle very closely, and I zoom in on this candle just a little bit more, you can see that that candle is a very bullish candle that looks like a middle finger to the bears. So when you get a very bullish candle like this one, you have to be open to the idea that this is still a bull market and this was simply just a mild pullback within a bull market. And if we go from today's close to the previous all-time high, we are only 2.5% away from an all-time high. And people are extremely bearish, and I won't even be surprised to find out that people are shorting this, expecting us to go way lower as we are just bouncing to a lower high. And while we can't rule that out completely, that is what people have been doing the entire year. Every time we get a pullback, they short this bounce thinking it's a lower high, and then the market just continues to rip their face clean off as we make that brand new all-time high. So a lot happened today, and on this middle finger to the bear candle, we did have increasing volume, only giving an even bigger middle finger from the volume as well. And this is why you do not want to get overly bearish in bull markets. It is much better to sit in cash if you're bearish and not be shorting these things. And if you are shorting this, you need a very solid risk management strategy because this is also a bull breakout. And if you look at SPY, this was a higher low into a higher high breakout. So the bulls have everything they need to push higher if they are going to be strong. And we did close that gap at 553, and we did open another gap at 547. And it's to be determined if that's going to be a breakaway gap where we do not fill that gap, we just continue to go higher. And if that is going to be a breakaway gap, I will not be surprised to see us gap up yet again tomorrow and just continue to run and leave everybody who is too reluctant to buy the dip in the dust as they miss another bull rally to all-time highs and short squeeze any of the bears that are trying to short the whole entire way higher. Now, there is obviously still a bear scenario, and there's a very obvious scenario where this is just going to resolve into a lower high, and then we do come down and fill that gap at 537. And I never ever write off the bearish scenario. I am always aware of both scenarios, and I let the price and the chart do all the talking. But as I went over last night, with so many things pushing to brand new all-time highs, it is very, very, very low probability that the bears are going to be correct when the market is this bullish. If you are a trader, your only edge in trading is being able to have some kind of higher probability than the average trader that's just flipping a coin, because anybody can flip a coin and say heads it's going higher, tails it's going lower. But trading is not as simple as just guessing. There are things you need to do, like reading the damn chart and following price and understanding when it's a bull trend versus a bear trend, because by far trend is the most important thing to know while you are trading. Bull trends push price higher, bear trends push price lower, and kangaroo markets just bounce around and go nowhere. Right now, we are without a doubt in a very powerful bull market, and that is why the odds continue to favor that we'll put in higher lows and bounce to higher highs. And while you have that high probability to be right with the low risk entries that we were getting down here near critical support, these are just no-brainer trades. Remember, low risk does not mean you are going to win. It simply means if you lose the trade, you are not going to lose a lot of money. So how do we trade this from here? Well, it's pretty simple. We have the higher high, we have the higher low, so stay bullish while we have that condition. And this is really just as simple as staying bull above 544 to 548. If we cannot hold above these breakouts, and this does end up being a lower high, we're going to see it in the price, and we're going to know to get risk off. And if we get risk off, I will be looking for that gap fill at 537. So 537 is where I'm looking to if we go to the downside. But right now, I think you'd be foolish to be looking down when all odds are pointing higher with the higher low into the higher high breakout, all on increasing volume after we had FOMC, after we had big tech earnings, and we still have to get through Amazon and Apple tomorrow after the bell. So your bullish leader is here to tell you we are likely going higher. It is very low risk to be long down here, so do not panic. Have a strategy, be prepared for both scenarios, and understand with the bull market, the odds favor that we're going higher. On the NASDAQ 100 triple Qs, we were up 2.96% today, and holy cow, did you get your face ripped if you were shorting the NASDAQ 100. We gapped up, we're back above the daily 5 EMA, we're testing the 50 EMA, we had the bull breakout, we had an increasing volume, we have a gap to fill up here at 480, and things are looking pretty damn good. Now this doesn't mean we need to go higher, but it is definitely looking good that the odds favor we're going higher, and I'm playing the odds, I'm playing the low risk, and I'm ready for this damn thing to go higher, baby. So in the NASDAQ 100, stay bull above 463. The next bull breakout is above 473. I don't think we're going to have any trouble getting through there. And then I'm looking for the gap fill at 480 and a resistance at 482. If we get above 482 and you are still shorting the NASDAQ 100, I will pray for you because we are likely going much higher and you are going to need every prayer you can get. So that is by far the most critical resistance zone you need to pay attention to. Assuming we do get there, obviously. If we don't get there, then we're just going to get rejected from this resistance. But follow price, be prepared for both scenarios. The bull scenario is that we are pushing higher towards 480 to 482 and then 493 above that. And then above that, we just go straight to brand new all-time highs without any resistance. But there is still bearish probabilities you have to respect. They are just the lowest probability, and this is likely going to be the higher low as we continue higher in a bull trend. If not, we can't hold this support, get risk off, and there is no harm, no foul in taking a small loss and protecting your capital. On the Dow Jones, we were up 0.27% today on extremely high volume. And yes, it was a little bit of a battle, but you know what? The Dow Jones doesn't really move that fast anyway. It is the slow and steady and gets the job done eventually. And that is why I have that arrow pushing up to 415 sometime in the middle of August. And then above that, I think we go even higher near the end of August and we hit 420. So that's the saying, you know, you're taking the stairs up, takes some time, gonna get there eventually. And then maybe once we get there, the bears can get excited again and we'll kind of have to see how that plays out. But we're likely going higher. We have the bull trend. We're above 407, 408. All that looks good. It's bullish. I don't know what else to tell you. It's probably going higher. On the Russell 2000 IWM ETF, we were up 0.58% today, and we slammed into that price target at 228. And if you zoom out here, I drew this arrow probably back here in June. People are freaking out about this, which I don't know why, but they were very upset with me that I thought IWM could go higher. And yeah, it took some time. And this was obviously a period where a lot of people were complaining because it wasn't happening fast enough. And I know none of you have patience, but holy, did that volume come in on that breakout. We started to push higher. I told you this was likely just a giant bull flag, and boom, broke out of the bull flag, hit the price target. People took profits. And if you didn't take profits there, well, you should have, but it's not a big deal if you didn't because we are still likely going higher. But boom, shaka, laka. We slammed in that price target within pennies, and I put that price target on this chart back in June when everybody was extremely bearish on small caps and thought there was no way in hell it was going higher. So yes, that's a boom shakalaka, and yes, we are celebrating that one, and yes, the llamas did very great on that push higher. So that is now the level we want to break, and above that, I think we have blue skies to all-time highs in the 240s. So stay bull above 223 and 220 and let those puppies ride. On the ARKK ETF, we were up 1.27% today, and it's really just going nowhere. We need to get back above 47, and then we could get to 50.7, and we're getting risk off below 47 because we still can push lower towards 44. And once more, I don't really trade this. It's just a sentiment indicator of risk on or risk off, and right now it's not really giving anything. On the VIX, we were down 7.41% today, and I do think the VIX is going to continue to crush down towards 13 as this bull rally picks up momentum and we push to all-time highs. But if it doesn't, then it is still possible we get fear and we get the bearish scenario. So don't rule it out completely, but right now I have the highest probability chance that the VIX continues to crush as we rally higher through the summer. On Bitcoin, we are currently trading at 64,700, so it's okay to get risk off here right around 65,000 because if you look at this chart, this is starting to look like a double top if we cannot hold 65,000, and this is looking very close. It's going to be a close call of whether or not this candle can bounce and hold 65,000, but I would protect your money and I would simply wait for proof that we hold 65,000. There's going to be plenty of time to catch the upside move if we do. But below 65,000, we will likely push lower towards 60 to 61,000. So 65,000 is a great pivot level, a risk level. Bull or bear, doesn't matter. Above it, we're looking bull. Below it, we're likely going lower. On NVIDIA stock, we were up 12.81% today. And holy cow, I think that was the biggest move of a mega cap that we have ever seen. Somebody can fact check me on that. But go tell me the last time a company that had nearly a $3 trillion market cap moved up nearly 13% in a single day. Holy cow. So yeah, that looks pretty damn good. Looks like we're going to go to 122 while we're above 115. And I do think you could stay bull above 102. And that's why I drew those arrows last night, because that was a very great low risk entry if you're a semiconductor bull. And if you're a semiconductor bull, NVIDIA is your leader, and it looks like it's leading higher to me. So if it keeps going higher, that's going to be very great for you semi bulls. But follow it closely, because yes, these still could be lower highs. Even though I doubt it, it is possible. And obviously you need to be prepared for a scenario where we do still get a lower high rejection. But right now above 115 with high volume buying and bouncing off of a very critical support trend line, it's really hard to say it's going to be bearish. So you need confirmation that it is bearish. And we can go ahead and just draw on a resistance trend line, which also looks like we're breaking above that as well. So if you get one more day above 115, I do think it's very easy to close that gap. And then above that gap, we're likely right back on the bull. On Tesla stock, we're up 4.24% today, and we are back above 230. Above 230, we're looking for a gap for that 245, and longer term, another price target up here between 289 and 300. So stable above 212 to 213, and do keep in mind it is possible we fill the gap at 213 first. So I'm not ruling out the possibility we still go down to 213 and then go higher, but above 230, we're looking bull, so maybe we're just going higher now, and this gap doesn't fill. One thing about gap fills that a lot of you still don't get right is these gaps do not have to fill, and especially on individual stock names. It is possible 213 does not fill, so don't get sold on the idea we have to go lower. Above 230, we're looking bull. On Apple stock, we're up 1.5% today. We're bouncing off of that support nearly perfectly, exactly where we expected at the risk level between 216 and 218. And above here, I'm looking for 232. And then I think we're going even higher than that, but this is conservative for the short term, and we do have earnings tomorrow after the bell. So if you're playing through earnings, you have to manage risk with position size, because we're likely going to move very quickly. And I do think we'll get into the 230s, and then above that, we'll likely push into the 240s. If we can't hold above 212 to 216 or 218, then and only then would I be getting risk off in Apple. So jumping back over to the S&P 500, the bulls are looking good today. They did everything they had to do. The bears are likely caught off sides yet again and misjudged another pullback, which is a buying opportunity within a bull market. So if you are still bearish, make sure you're managing risk. Remember, it's okay to lose a trade. It's okay to be wrong, but it is not okay to stay wrong and continue to lose money and make your losses outweigh your wins. Your goal in this game is to be profitable. Otherwise, why the hell are you trading at all? If you're losing money, you have much better things you could be spending your time doing. So don't waste your time to lose money. Make sure you're actually learning how to trade and being profitable, and that is what I'm teaching you to do in my Discord server. Each and every day I'm giving you objective price action, trade ideas, technical analysis, and intraday updates to help you become a profitable trader and to help you come crush this market just like we are. I wouldn't even say at this point we're crushing this market. I think we're absolutely destroying this market, especially after a day like today. One day moves like this, when you are properly positioned, can completely make or break your trading year, and by far we were properly prepared and properly positioned and absolutely crushed this damn market. So if you want to come crush this market with us, consider joining my Discord server, and you can find out how to join my Discord server by clicking on the link in the description of this video. So thank you for watching, everybody. I hope you're crushing this market, and as always, I will see you in the next episode.